Hey guys, welcome back, and in this video we're going to do some long-term technical and fundamental analysis on all 30 stocks that make up the Dow Jones Industrial Average Index. And we're going to do that with the help of our custom indicators on TradingView trend candles, which you can see here that colors all the candles either green for an uptrend or red for a downtrend. And this is on a monthly time frame looking back 10 years. We'll also use our stock fair value and business quality score indicators as well on all of the stocks. And you can get lifetime access to all of our custom indicators on TradingView by going to our website clickcapital.io/TradingView-indicators and then just enter in your email and TradingView username, and you can check out with PayPal or with a credit card. All you need to use our indicators is a free TradingView account. Okay, let's dive right in. So this is the Dow Jones Industrial Average Index. We're just sitting right under 34,000. We did get almost up to 37,000 in the start of last year. However, with the sell-off last year, we dipped down to 28,700 in September. However, we're still technically in an uptrend here, but just coming up to a major resistance zone around the 35,000 level. And a similar story with the first stock in the Dow, Apple. It's had a huge run this last 10 years. And is up 946% in that time, and it too is sitting at a bit of a resistance zone here, and has managed to stay in an uptrend for this entire past decade. However, the fundamentals on Apple look to be flatlining along with the stock price. Our stock fair value indicators got fair value at $114 a share, and so the current stock price $165 is 43% above that. Although obviously the business quality score is really good because it's Apple, it's super profitable. Trailing 12-month revenue has been flatlining for over a year now, and actually peaked last year in September at $394 billion, currently coming off that a bit at $387 billion. We can see free cash flows pulled back as well, and the company does have a great record of financial management, issuing a lot of low interest bonds, so they do have a lot of debt, but that's well covered with free cash flow and their cash and short-term investments as well. Over to biotech, Amgen, that's been in a strong uptrend this past decade. However, it hasn't had a huge advance, only up 141%, with a bit of overhead resistance as well. Fundamentally, it looks okay, like a very mature business. Revenue hasn't had huge growth. 5 years ago, we're at $23 billion, trailing 12-month revenue. Now we're at 26. They do have a bit of debt there at $39 billion. Pretty good business quality score at 10, and stock price is currently 18% overvalued at $248 a share. One of Warren Buffett's long-term favorite stocks, American Express, seems to be range-bound this last couple of years with big overhead resistance and an underneath support, and it's only up 142% the last decade. Fundamentally speaking, it looks pretty good. Free cash flow is increasing, same as revenue. The business quality score is increasing, and so is stock fair value. And our indicators actually got fair value at $279, so current stock price of $163 is 41% undervalued. Boeing looks to have been in technical trouble for the last 3 years and is still on a technical downtrend with big overhead resistance that it can't seem to break through, and it's up 139% the last decade. And we can see the reasons for the big stock price fall in Boeing because it shows up in the fundamentals as well. Our stock fair value significantly decreased before the stock price decreased actually, and so did our business quality score indicator, and revenue and free cash flow had been trending down as well. However, in the recent year, it looks to have stabilized somewhat, and you can see that on our indicators as well. However, we still have it as grossly overvalued by 149% because we've got fair value at $82 a share and business quality score at negative reading, so that's still not good. Caterpillar's hovering near all-time highs in an uptrend and have been up 159% the last decade. Fundamentals look good, although free cash flow has been tracking sideways for a number of years. Revenue has been increasing the last couple of years, and we can see our business quality score indicator improving, and we've got fair value at $288 a share, so still 22% undervalued here. Salesforce has held on to its uptrend for a decade and recently found support down here. It's up 341% the last 10 years. And pretty solid fundamentals on Salesforce. We can see a nice smooth increase in revenue, free cash flow, although our business quality score indicator is around 0. And we've got the stock price at currently overvalued by 7.9%. Cisco's been trading in a really wide range the last couple of years, has recently broken through a resistance zone, and it's up 138% the last 10 years. Its fundamentals are pretty good. Revenue looks to have broken out to all-time highs. We've got a good business quality score at 18, and it's only slightly overvalued by 9.2%. A recent favorite of Warren Buffett's is Chevron. And this, along with a lot of other energy stocks, has been the big divergence in the market, We saw the market sell off hard last year, and that's exactly the time Chevron went into a technical uptrend and took out a big resistance zone, and isn't too far off all-time highs, and it's only up 43% the last 10 years. And it's no surprise Warren Buffett's invested in this because the fundamentals look great. Revenue's really uptrending strongly, so's free cash flow, so's tangible book per share, debt's been trending down, cash and short-term investments trending up. And our indicators love it too. We've got a business quality score increasing now, almost 17. And a huge gap between what our stock fair value says is a fair value for the stock, $749 a share. So we're currently 77% undervalued here. Disney's been one of the Dow laggards this last 10 years, only up 76%, but however it does look to be forming a big rounded bottom here after finding support in this major zone here. However, it is not in a confirmed technical uptrend. Fundamentals look okay, but I think what the market doesn't like is this free cash flow gone down to 94 million. And for a company with 180 billion market cap, that's not much. So those big investments they've been making into Disney Plus and other assets have come at a big cost of free cash flow. However, their revenue is trending up, but we have a pretty low business quality score at 2.5, and we've got the stock price as undervalued by 25%. So we may have found support on Disney. And Dow separated from Dow DuPont back in 2019. And since then it's largely been sideways price action with a little bit of overhead resistance. Its fundamentals are okay. It has had revenue and free cash flow tapering this last couple of years, but still solid business quality score and stock fair values. Goldman Sachs is up 131% the last 10 years and sitting right in the middle of this big range we've had the last couple of years. Apart from free cash flow, which is actually negative, its fundamentals look pretty good, increasing revenue, an okay business quality score, and we've got fair value as 34% higher at $5.21 a share. Home Depot has remained in a strong uptrend this last decade, but in the middle of a big range here. Fundamentals are mixed. We do have a sideways tracking free cash flow, steadily increasing revenue, pretty good business quality score, and we've got the stock as currently overvalued by 34%. Honeywell International's had a good decade, up 176%, and still on an uptrend after having found support back in September last year. Although contrasting that price action has been weakening fundamentals, and we can see that in the declining revenue and free cash flow, and we've got stock fair value at $146 a share, which is 34% lower than where we're trading today. And the worst performing stock of the Dow Jones Industrial the last 10 years is International Business Machine, IBM. And we've been in a confirmed downtrend since late 2014 with a huge overhead resistance zone it can't seem to break through. And again, we can see the stock price correlating to fundamentals, steadily declining revenue and free cash flow. And our fair value indicator currently has this sitting right at fair value around $120 a share. Another low performing component of the Dow has been Intel, only up 48% the last 10 years, but similar to Disney, looks to have found support and forming a rounded bottom here. However, the fundamentals are not out of the woods yet. We've still got declining revenue, increasing debt now at $42 billion total, and we've got it currently a little bit undervalued by 18%. Another solid performing old economy stock, Johnson & Johnson, up 103% the last 10 years, looks to have found support last month and remains in a steady uptrend. Fundamentals are okay, but just looks like another large mature business with kind of flatlining revenue and free cash flow. We've got it as a little overvalued. JP Morgan's managed to hold on to its technical uptrend and up almost 200% the last 10 years. Fundamentals look good as well, with revenue breaking out and free cash flow close as well. A healthy business quality score, and we've got it undervalued by 56% with fair value at $318 a share. Another Buffett favorite, Coca-Cola, only up 57% the last 10 years, found support last month and currently approaching all-time highs. And again, the fundamentals of another large mature business. McDonald's is performing really well, currently trading at all-time highs, up 191% the last 10 years. However, the market might be getting a bit carried away with McDonald's because the fundamentals are contrasting the price action. We actually have flatlining revenue, declining free cash flow, very large total debt at $48 billion, a negative business quality score, and we've got it as overvalued by 64%. And this is a stock we've actually got on our short watch list. Another disappointing Dow component the last 10 years has been 3M, actually sitting right flat this last 10 years, having been in a strong descending downtrend this last couple of years. And we can see that in the fundamentals, which do look to be flatlining. Actually, we've got a good business quality score at 18 and slightly undervalued by 10%. Merck has been performing well these last couple of years, currently at all-time highs, up 174%, and fundamentals look solid on this one as well. We've got it currently undervalued by about 30%. And the second best performing Dow component the last 10 years, Microsoft, up 908%. We've got some formidable resistance above it, and the last 10 years on the fundamentals looks like textbook perfect growth. However, much like Apple, they look to be flatlining this last year or two. And we've currently got fair value 12% lower at $256 a share. share. Another reasonably good performer the last 10 years has been Nike, up 327%, but again with some pretty big resistance above. And even though its revenue has been steadily growing, free cash flow has been declining, and we've got fair value at 60% low at $78 a share. Procter & Gamble, another solid performer, up 96% near all-time highs, but its free cash flow has been declining this last couple of years. Revenue's flatlining. We've got fair value 39% lower at $108 a share. Travelers up 103%, still on an uptrend. Revenue's been steadily increasing, free cash flow flatlining, and slightly undervalued. United Health has had a great run the last 10 years, up 784%, but like many others, with major resistance above, and very solid fundamentals with consistent increase in revenue, free cash flow, a high business quality score, and we're sitting right at fair value here. Another solid uptrending Dow stock, Visa, currently near all-time highs that it's struggling to break through, up 450% the last 10 years. It too with very strong fundamentals, sitting at fair value. Another one in the laggard group is Verizon, down 19% this last decade. But it too, like the other laggards, has been forming a rounded bottom at this major support zone, but has yet to go back into a confirmed uptrend. Fundamentals are not looking too bad. Free cash flow stabilized, revenue is increasing, healthy business quality score at 9.6, and we're 34% undervalued here. However, it does have a huge amount of debt, $176 billion. Another disappointing stock of late has been Walgreens Boots, currently sitting at major support here after being in a confirmed downtrend these last couple of years. Revenue has been flatlining for a few years now with declining free cash flow. It does have significant debt at $36 billion. However, we could be finding a value area as we've got fair value at $61.96, which is 42% above where we are now. And last but not least is Walmart, up almost 100% this last decade, but in a big resistance zone here. Fundamentals look pretty good, but we are a tad overvalued here by 24%. Okay, to sum up, the three best performing Dow stocks over the last 10 years were Apple, Microsoft, and United Health. And the three worst performing Dow stocks over the last 10 years were Verizon, Walgreens, and IBM. And here's the Dow Jones once again, up 133%. So we can really see how those stocks like Apple, Microsoft, Nike, Visa, United Health have really pulled up the averages. Because we do have a lot of stocks that are kind of tracking sideways, a few that are lower than 10 years ago, and a lot of them with this big overhead resistance that we're seeing in the main index as well. Okay, that wraps up this video, and if you're interested in getting our indicators, head on over to our website, clickcapital.io, and navigate to our indicators page. And you can get a deal on all 13 of our indicators and save $200. Hit the subscribe button if you found some value in this video, as I make a lot of videos like this about technical and fundamental analysis. And I try to break down complex things like stock investing into simple and easy to understand methods that we can all repeat in order to achieve better investment results. Thanks very much for watching if you made it this far, and I hope to see you again soon. Cheers.